If you did not call the firm Collaborate, what was the second choice?
I have to kill you if I told you, Jordan.
In this episode of Investors and Operators, I'm speaking with Grant Kornman, who you and many others will know in the independent sponsor community. Grant is a partner and co-founder of Align Collaborate, and we're going to be talking a lot about independent sponsors today. So, Grant, let's get straight into it. Why did you call it Align Collaborate? I love the name. Kind of feels like a little Ricky Bobby version of the independent sponsor naming of a firm. I love it. I'm for it. How did it come about? And what do you guys focus on?
That's a great question, and we've gotten a lot of jokes about it. Do we align before we collaborate, or what? Is that the way these things work? I really have to credit my partner Rob Langley with coming up with the name. And when he threw it out there, it really resonated with Michael and I. Really, because I don't think there's a segment of private equity that is as collaborative as the independent sponsor community. And a big part of our success, and we'll get into our journey in a little bit, but we were an independent sponsor for more than a dozen years. And so much of our success had to do with helping others, having others help us, really collaborating, not just with our investors, but other friends who are independent sponsors, with key stakeholders, with professionals like lawyers and accountants. It's an awesome community because everyone's just really trying to help each other out. And so Collaborate just really captured the essence of what we're doing in this whole community.
There we go. So I got to know, why did you guys start this business instead of staying an independent sponsor or instead of raising a traditional fund? Like, what's the background?
I love this question. Because so when we announced we were going to do this to our friends, and by announce, like calling them up and stress testing the idea, the first question we got is, "Are you guys nuts? You worked so hard to build NCK Capital and be a successful independent sponsor. This is like getting to the top of Everest, then rolling all the way back down to try to hike back up again." But the reason we started Align Collaborate is we went to a big conference that everybody knows in the space. And we did a little bit debrief with maybe 10 or 15 other really high quality independent sponsors, just to compare notes on capital partners and investors. Is anyone new, anyone high quality? There's no way you can meet with everyone at that particular conference. And I was so excited for this phone call because I just wanted to hear about all the new stuff out there. And we got on the call, and like everyone kind of had the same ho hum response, which was, there's nothing new, there's nothing different. It's just kind of more of the same. And I think that was the light bulb moment for Michael and me. Um, this industry has just exploded in the last decade. The quality of sponsors has gotten so much better. Candidly, we have friends at funds who maybe used to snicker at us as being independent sponsors who are now, flying the flag proudly. The capital has evolved a lot. There's a lot more investors in the space. There's a lot more capital available to independent sponsors, but just hadn't really evolved very much. It was the same choices. It was the SBICs and other debt equity groups. It was controlled buyout funds, some limited institutional LPs and fund of funds, obviously high net worth and family offices. But every one of those buckets kind of has trade-offs, kind of puts and takes. And none of them really kind of woke up and said, "Hey, how do we become the best equity solution for sponsors raising capital deal by deal for their buyouts?" Like, no one woke up and said, "Let's do this intentionally. And let's think about the customer first," which is the independent sponsor, versus themselves, the investor. And so we just had this thesis that if we built the equity solution we'd always been looking for, but hadn't found out there, we'd probably get to work with some incredibly talented sponsors and invest in some really fantastic businesses. And so I guess it started us being somewhat unhappy customers of these capital markets.
What was the need? Like, what bucket of independent sponsors need that equity only solution?
Well, I think if you reached out and polled a bunch of great independent sponsors, they will tell you the hardest thing is finding the equity. If you go to any conferences, the rooms are full of more credit centric investors who are the early adopters of this model and this this way of investing, and there's not enough kind of pure equity investors, and there's not enough pure equity investors that do it really well. I mean, for many sponsors, working with a controlled buyout fund is not their first choice. They're trying to build their track record in their firm. And when they partner with a controlled buyout fund, it really puts that into question. Do they have full attribution for that investment? They don't want to be a co-sponsor with a private equity fund. They want to be the sponsor. Family offices are great. There's a ton of great investors in the space that are family offices, but they tend to move a little slow. They tend to not be a ton of value add. They can be mercurial at times. And so when you look at the number of equity investors out there in the independent sponsor world, say, hey, who focuses on my industry? Who focuses on the size company? Who's moving fast today? Like, that world gets really small really fast. And by working with an equity centric investor like ourselves, it actually gives a sponsor a lot more flexibility. They can really think about capitalizing their investment for what's best for their business and not about what's best for their investors. And that's really a great place to start an investment from.
So, yeah, I mean, I understand the point of like having to scratch your own itch of like, this didn't exist. I wanted to exist, but like, why go through the pain of entrepreneurship again?
Jordan, that's a funny question from a guy who likes to run marathons, pushing a stroller the whole way.
Touche. Is it, why did you go down because you guys have been, you and Michael have been independent sponsors for what, 10 to 15 years, had your success. Was it that you just wanted to do a different business model and it just so happened you had experience and you just like, okay, I've done that, but I want to try something else that's still in the space?
I think once an entrepreneur, always an entrepreneur.
Yeah.
You kind of love doing hard things. You love doing innovative things. You love when you see an opportunity going after it.
Yeah.
And when we were thinking about what's next or what we want to do with our careers and our journey, we'd had a lot of fun with the independent sponsor model and had a lot of success with it. But when we looked at our skill sets, our relationships, where we could create the most value, we just thought this was such a huge opportunity that we wouldn't be able to forgive ourselves if we didn't go after it. And I think that's true of a lot of entrepreneurs, right? You see an opportunity and you just sprint towards it, whether there's a brick wall between you and that opportunity or not. You're going to burst through it and enjoy the process. And, I think when we started NCK, 12 plus years ago, people thought we were nuts to be an independent sponsor. It seemed really hard and difficult, and it was a little bit of a more lonely place than it is today. And so now that we've been a part of this very rapidly growing and vibrant community and had a lot of fun and made a ton of friends through the entire ecosystem, we thought this was a great new opportunity and challenge for the next stages of our career.
Yeah. I love it. And to the point of being an entrepreneur, sometimes you just can't help yourself to create ideas. And it's interesting because I think about, that balance between being disciplined to focus on the one thing versus, sometimes these little side quests can turn out to be pretty valuable. And people who are 0 to 1 is a very tough skill set. And it's a different skill set than 1 to 10. I've had to ask myself, am I just not good at the 1 to 10? And I just need to push through that ceiling to figure out how to be that entrepreneur and evolve. But that's another podcast. Investors and Operators is the podcast of 51 Labs, a full-service digital marketing agency that focuses on private equity firms, the portfolio companies, and others in the M&A market. We handle everything from branding to video to websites, LinkedIn content, and everywhere in between. We've done over 150 projects since 2019, and usually we do a lot of work with emerging managers, so funds 1 through 3, independent sponsors, but also funded private equity firms. Reach out, happy to help out. Let's talk about, kind of, I guess, part 2 of this, which is just your journey. Where does this all begin? I mean, I think you guys have a very unique perspective with independent sponsors because you have been down that journey, but let's rewind. Like, what is that story?
I think we were independent sponsors by accident. So if we go back, I don't know, 13 plus years ago when NCK was born, it really started with Michael and I being entrepreneurs. Again, we built a couple companies from scratch. We had enjoyed being kind of the C-level guys in those businesses.
What company
And
did you build?
we had a consumer finance business and a restaurant company. And Michael and I had very different paths. He'd come up really through operations, being an early C-level CEO, COO. I'd come up through finance and private equity and real estate. And if we built these companies, and we were thinking about adding another company to our portfolio for a variety of reasons. And I was looking at Michael and his skill sets. I was looking at me and my skill sets. I looked at how hard it is, to your point, to get from zero to a couple $1 million of EBITDA. And we just had this light bulb moment, which is, let's go buy a company with a couple $1 million of EBITDA. And then we can really get more leverage out of our time and help those teams really accomplish their goals and go faster and farther than us being the CEO or COO or president. And at the time, we'd done well financially, but we didn't have enough personal capital or personal liquidity to go buy a $2 or $3 million EBITDA business. And Michael asked a good question. Well, Grant, that sounds like a great idea, but where do we get the money? And I kind of joked, if you have a good company you want to buy, we'll find the money. Let's worry about the company first. And so we just started looking for businesses to buy. And we had never heard the term independent sponsor, or back then it was more like fundless sponsor, which I'm going to steal a joke from Richard Baum, which independent sponsor sounds like, or excuse me, fundless sponsor sounds like homeless person when you're trying to buy a company. We never heard that term, but we just started looking for companies, and we were meeting with this investment banker, and we really presented ourselves more like a family office since we're brothers.
Yeah.
And he kind of looked up, and I can't say it was with a smile on his face. He goes, "Sounds like you guys are a fundless sponsor." And we said, "What's that?" He goes, "It's guys that don't have any money who are going to buy a business and raise the capital." And he didn't, like I said, it was not a positive response. And we kind of walked out of the meeting, and we were a little dejected, I won't lie. And we did a little research, and turned out we were a fundless sponsor. And there was a really small conference at the time up in New York, which is actually where I think I met Richard for the first time. And we flew up there and started to get to know the community and make friends. And we just thought there was a growing number of very smart people pursuing this model. And it was a great way for us to use our skill sets to create value for ourselves and our investors. And, NCK was born.
What was the first company you bought? And kind of walk us through some of the things you really got right along your journey as an independent sponsor. So maybe not the first company you bought. Let's just go straight to the key takeaways. What are the things that you really got right as an independent sponsor, and what are the things that you just missed and that you can share with the audience about, avoid this on your first deal?
I think getting your investors right is one of the most important things as an independent sponsor. The wrong investors can really make what is already somewhat of a hard road to travel even harder. And when I think about a lot of our success, it was really picking the right partners and investors for those particular investments, and also knowing which investors are the right fit for us. I'd been in private equity, Michael had been an operator, but we weren't guys that spent 12 years or 15 years at some storied fund and then we're spinning out to hang our own shingle. We were more entrepreneurial. And so there was types of investors out there that just were never going to be a good fit for us. And so we focused on the folks that were a good fit and built some great partnerships along the way, and really found relationships that were kind of 1 + 1 = 10. And I think oftentimes independent sponsors kind of optimize for the wrong things in their investors. Of course, you want the best economics. We're all economically driven people. But does that investor understand your vision? Does that does that investor fit what you're looking for in a partner? Are you looking for a co-sponsor? Are you looking for a co-investor? Um, or do you feel like you're going to be able to deliver bad news to that investor or good news? Business is rarely an up and to the right thing. There's bumps along the way. Um, at the end of the day, if you're an independent sponsor, you've joyfully signed up for a little bit of a David and Goliath game, right? You're going out there as a relatively small group and you're trying to compete with some of the biggest well-funded groups in the country to buy and build companies. We love that David v. Goliath thing. It was really fun for us, and most independent sponsors love it too. But at the end of the day, you should pick investors that bring more to the table than just capital. They should be stacking the deck in your favor from the relationships, lenders they can help introduce you to, help recruit executives. But there's a blend, there's a place where value add bleeds into getting in the way. And I think that's where we differentiate ourselves as investors in this space, because we have been independent sponsors, is we're very respectful of that line. Like, we want to be helpful. We want to stack the deck for our independent sponsors that we're co-investing with. But at the end of the day, these are their investments. They're the sponsor. We don't want to get in the way.
And how do you figure that out though, when you got a shot clock on a deal and you're a first time independent sponsor and maybe you came from a, fantastic background, you are investable, but this is your first deal and you got a shot clock and you don't know one capital to provide from the other. Like, how do you figure this out besides reference people?
I'm gonna throw out the word collaboration just to build on a theme. One, I think the best references we got about investors were talking to other friends of ours who were independent sponsors. Hey, who do you know? What do you know about this group? Were they good to deal with? Were they bad to deal with? I think independent sponsors talk about investors like old ladies in a knitting circle. They're very happy to share candid feedback about the good and the bad of working with different groups. So I think building your network of other sponsors is mission critical if you're going to be an independent sponsor. I think building relationships with investors early is important. This is something we got wrong in our journey, because we didn't want to reach out to investors early on unless our deal was like buttoned up and it was a little Christmas gift with a bow on top, ready to go. That was a mistake. We found out calling investors early, allowing them to see how the sausage gets made, allowing them to hear us say no, like call them back and say, hey, we didn't like this. We got in, we went to see the team. We didn't like the team, or we didn't like the market opportunity. Appreciate you listening to the story, but we're going pencils down. I think we really underestimated the value of having those conversations two ways. One, it helps an investor understand you have discipline. So when you're banging the table and you're all in on an opportunity, they're going to listen. But two, for the independent sponsor, it allows you to start to understand what kind of questions that investor is asking, what's important to them. Is their vision on value creation and align with your vision? Do you think about investments the same way? And so that when you are on the shot clock, hopefully you already have a good idea who Align Collaborate is, what we like to invest in, and how we're going to be as partners, because we've had a bunch of conversations before you got to that point.
If I think it's interesting because, they want to see how thoughtful you are. The capital provider wants to see how thoughtful you are, even if it's a deal that you're not truly going to go at, of like, hey, here's why I'm excited about it, but here's where the risks are. And I need to explore it more over the next 2 weeks with the seller or whatever. And it shows, how objective and quality your thought is. But to your point, I love when I think back over the past few years, the conversations I love, it's almost like you forget that you're having the conversation because you're in a state of flow and you get like an hour into it and you're like, wait a second, this is awesome. And that gets to that point about collaboration. And it's almost like the people are just like, I don't care if we do the deal together. I just want to talk to you about this. And those moments, those are some of the breadcrumbs, if you will, that lead to like success and why you need to work with somebody.
100%. Actually, my most favorite email or outreach to get from a friend is like, hey, Grant, I'm working on something. I just want to pick your brain about it, whether it's for you or not, because that just means we're being helpful. Like, our whole value add really is not our capital. Our value add is, hey, can we introduce you to a key resource that makes a difference in your investment? if the investment's not for us, can we introduce you to an investor that it is a fit for? Do we have banking relationships that we can bring to the table? Do we have experience in the sector that our perspective can be helpful? You know, going back to our name of Collaborate, we're really trying to deliver way more value to our independent sponsors than just capital.
Yeah. What advice do you have for people who are considering to leave wherever they're at and start this journey as an independent sponsor? What do they need to know before committing to this journey?
One, they should absolutely do it. You know, we are in a performance-based business. Whether you're an independent sponsor or at a private equity fund, your career is absolutely based on the results you generate, whether you're journeying for yourself or for the firm or fund you work for. So if you have confidence in yourself and the ability to generate results, I think there's no better model in private equity than the independent sponsor model, because it just opens up so many paths for you. You can stay an independent sponsor, you can raise a fund, but at the end of the day, your job is to go make money for your investors, whether you're at a fund or doing the independent sponsor thing. Advice for someone thinking about doing it: one, talk to people who are doing it. Hear about what's good about it, what's bad about it, the challenges, the opportunities. Talk to others, and you got to be pretty entrepreneurial. But I think good investors tend to be pretty entrepreneurial people.
Really?
You disagree?
I disagree. I think a lot of people, I guess it goes to like taking investment risk versus entire start a new firm risk without the institution of I worked at this large investment bank and then I work at this larger institutional fund. And now I got to go off and do this. And they might not fully know the lack of support. And it's freaking lonely. You don't have someone to bounce ideas off of. It's even down to like the Amex, like the compound effect of all that ambiguity. I think a lot of people are great investors, but they're not great business builders. So how do you sort for that of like, or do you, is that one of the things that you filter for is like, can this person build a business, not just be a great investor?
Well, there's a couple questions in there, so I'll try to unpack them. When I said that I think really great investors tend to be great entrepreneurs, when I look at bigger private equity funds, usually there's a disproportionate amount of value being created by a small group of people. And those folks tend to be pretty entrepreneurial, because when I think of entrepreneurial folks, I think people who are good at finding a market opportunity, they're good at assessing the risk, and they're good at marshaling the resources needed to take advantage of that opportunity. And whether you're working at a big fund or for yourself, that process is pretty similar. The difference is when you get outside of your big fund or the institution you're working for, you find out how much of your success was because you were working for XYZ firm versus you and your relationships and your talents. And it's never one or the other. It's some percentage of both. And I think some people are shocked to find out that, hey, a lot of their success had a lot to do with the seat they were in. Not good or bad, just the reality of the situation. So going back to how we assess independent sponsors, we really mapped out all our friends who we've seen be successful over the last decade plus and what made them successful. And a big part of it was really strong communication skills, which really really bleeds into leadership skills. Because as an independent sponsor or any sponsor raising their capital deal by deal, you have to be able to communicate with a seller and why you are the right buyer for their business. You have to be able to communicate with equity investors and debt providers on why your opportunity should attract capital. But most importantly, post-close, you got to help work with that management team to build those businesses and be a great communicator with those teams. And if you need to recruit in human capital, which we're a lower middle market investor, honestly, human capital is probably the most important things to these lower middle market businesses. When you have to convince a very talented executive to leave his or her great job to come work at your small company because of what you want to build there, you got to be a great communicator in those situations too. And so communication to us is super important. People need a great independent sponsor can communicate very complicated ideas in very simple ways. Um,
Can you,
y'all,
what's the inverse of that? Like, what is a, what does poor communication look like at various touch points?
so that's probably a good segue into my next comment I was going to make, which is great independent sponsors really walk a very narrow path between being a great investor and being an investment banker. And what I mean by that is when you're raising capital deal by deal, you can't just be an investment banker. You can't be all about getting the deal done and just whatever it takes to close the deal, because that makes investors like us very nervous. You also can't just be a pure investor who just sees the world very as everything that can go wrong. You have to be a little bit of a believer. And so great independent sponsors walk that line where they're the advocate for the investment. They're convinced they're put it all on the line, but at the same time, they're not running past real risks. And they're doing a good job of highlighting the risks, coming up with ways to mitigate the risks, and also communicating about what can't be mitigated. And so if you're all negative, you're never going to raise the capital. If you're too positive, you're never going to raise the capital. There's a happy medium. So when it comes to being a great communicator, is how do you need to be able to present the opportunity, what you're going to build with that opportunity, what roadblocks may be in the way, what solutions you have for those roadblocks, and do it in a succinct fashion.
I love it. And when you're getting to know an independent sponsor that maybe, is a newer relationship, and let's say it looks like an interesting deal, like what is your process? What are you looking for beyond strong communication skills?
Right. In terms of what we're looking to learn about that opportunity, we understand that from the moment someone contacts us to a close, there's a lot of sausage making going on.
Yeah.
Um, the initial phone call, what we're generally looking for is a very good summary of why this is a business the sponsor wants to buy, what they want to build it into, when it's time to sell this company, what's it going to look like, and really what their key questions are. At that point in the process, they probably have more questions than answers. And we're more curious about the questions they're asking than the answers they're providing because of where they are in the process and the information they have at the time. I would say one of my biggest surprises from going from independent sponsor to an investor is how many times I get on a phone call with a sponsor, and let's say it's an hour phone call. 45 minutes, 50 minutes is all about the deal. And then the last 10 or 15 are like, oh, let me tell you what we're going to build this into. I would flip the script on that. I think the best independent sponsors, hey, I'm buying this business. Here's the valuation. Here's how we structured it. Here's how we sourced it. Now let's spend as much time as we can on how we're going to build this company and why me, the independent sponsor, my skill set or experience tells me this is a great investment and how those skills are going to really drive the value creation. That I think has more impact on your ability to raise capital than the deal. Like, getting the deal done is like going to a track meet and getting to the starting line and everyone applauding for you before the starting gun's even gone off. Once you close the transaction, that's the starting gun. Now it's time to go run the laps. And there's a lot more to do with value creation post close than pre close.
What what are some of what are some best practices around diligence with independent sponsors now? So, for example, when you look at doing a market study, I heard that on one of the other podcasts you were on. Let's just start there.
Mhm.
Um, is that newer? that people that is becoming more standardized now, just on market studies. What are some general firms that are not, Bain, BCG, McKinsey for 500 to a million that an independent sponsor can afford? And, how much should they budget for that? And, what are, besides doing that CDD work, what are some other best practices that are maybe more recent?
Look, we believe one of the best, most scalable and repeatable ways to create value in private equity is buying lower middle market businesses, doing a great job integrating them into a platform. So it's a great business with great scale and selling them into the middle market. It's hard to get from the lower middle market to 15, 20, 25, 30 million of EBITDA without doing some M&A. When we think about market studies, I think the two biggest parts of them that are helpful is one, the voice of customer, interviewing customers, understanding why that company exists and what their reason for winning is. And then two, market mapping. Really doing a good job of understanding the landscape for M&A targets. If you're investing into a niche industry where there's only so many companies, your ability to transact in your hold period is probably pretty limited, right? Are those companies going to get through diligence? Do the sellers want to sell? Can you agree on a valuation? There's a lot of reasons why you're never going to connect on an acquisition if you don't have enough targets. And so when you talk about doing that kind of commercial due diligence, I think really laying out the universe of potential add-ons is critically important. And they can be what I call lookalike companies, businesses that do what we do, but just in different geos or segments. They can also be TAM expanders. Like, hey, we sell to this customer. Here's our value prop. We can sell these other things to the same customer base. Or these are the products we sell or services we provide. We sell it into this end market. We can move into this end market. So moving into buying companies that expand your TAM is another great way to grow through M&A. But so many times I think sponsors, just have a slide that says where to go buy some companies. And I think the more work sponsors put in and around that analysis, the easier it is to attract capital. Like, hey, here's the full universe. Here's the target scorecard. We would buy businesses in this region, this size, this valuation range. We've identified that there's 400 of these out there. We're already having preliminary conversations with 50 of them or 10 of them. Really helps. And I think that market mapping, those voice of customer studies that are part of a market study can be very, very helpful.
If you had to put ballpark, what percentage of deals that you're seeing go through that process, where do you think it is now? And yeah, where do you think it is now?
I think it's a small percentage today. We're seeing it more and more. Um, I wouldn't say it's the norm. It's definitely more the exception. But I do
Yeah.
think as this market gets more sophisticated, it's going to become something you see more often. And I don't think doing a market study just to do one makes sense either. I think you need to understand, really have a well-defined reason for why it makes strategic sense to go do it. In terms of cost, they're not cheap. They can be, on a limited scope, 60, 50, 60 grand. And, you can call Bain, they'll be happy to charge you millions of dollars for that work.
Yeah. Um, what what do you think are some of the surprises or maybe misunderstandings that independent sponsors have in working with capital providers, and what can they do to, um, I guess, get through that and not be surprised or have more clarity along the process in working with capital providers?
That's a great question, Jordan. I think sometimes independent sponsors don't target the capital that's best for them. Um, there are certain buckets of capital that are better suited for different types of sponsors. Um, and so, look, if you're rarely new, if you've never bought a business before, maybe working with a controlled buyout fund and doing a co-sponsorship model would be a really great choice for you, so that you can kind of learn what great looks like. I have a friend who's a great independent sponsor who's been built one of the biggest firms. He was in the medical field before becoming an independent sponsor, and he very strategically worked with some very, very high quality buyout funds for his first couple investments. And frankly, learn from the best. And I think he would tell you that those early relationships have been a big part of his success long term, um, versus working with groups that wouldn't have worked in the trenches with him, or more just a pure source of capital. If you're wanting to build your track record and you want to raise a fund one day, working with groups like us, where we're really more of a co-investor, can be a great choice. I think it really just find the capital that's best suited for you, what you want to build in your investment.
Maybe kind of shifting gears, how do you think that your definition, and this is shifting more on the personal side, but like, do you think that your definition of success has evolved in the past 5+ years, and maybe in what way?
I so we all wake up every day because we're pretty coin operated people, and we're here to, make a living for ourselves and our families. But I think what I've enjoyed most in my career is just working with really smart, really driven people to accomplish really big, audacious goals. And I think that's what I love most about what I'm doing today here at Align Collaborate is I get to work with really smart people, both internally, but most importantly, externally. All the independent sponsors we work with are so talented and so driven and have such big goals. It's very fun to be part of their show and be able to ride on their rocket ships that they're building. And that's what gets me up every day and gets me excited to do my job.
If you were not doing this job, what do you think you would be doing? Like, if you could not work in the finance industry, you could not do it.
So
Actually,
do I
let
get,
me ask
do I get
a
to be in
different question.
business or
Okay, that's a good question. So, if you had to build a $10 million business in 5 years, and it could not be as an investor, what
right?
business? What business would you do, and how would you do it?
I would be all over blue collar services, and we've invested in a number of these companies today. We have made a huge mistake as a country, kind of vilifying the skill trades, and we have a huge imbalance between supply and demand. There are way more. There's a huge demand for electricians, huge demand for plumbers. I mean, all the skilled trades. And when I started out as an independent sponsor, I wish we could have raised capital for these businesses, because we could have bought $5-10 million EBITDA, residential HVAC companies for 4 times with seller financing, but we couldn't have come up with the other dollars. Today those businesses are worth 10-12 times. So there's a lot of, if you go to luxury resorts out there are a lot of plumbers and electricians who've sold their businesses to PE for some big numbers. And I'd probably be, the best plumber in Dallas. Not me personally, but building a company that was the best plumber in Dallas.
I love it. Well, similar to our business, you work with someone that you know very well. I work with my wife, who's my co-founder. You also have started this journey with your brother Michael. So, which is awesome, because you guys have worked so much together and had so much success. You know what it's like to buy a business and scale it. You've been through the ups and downs, and you're able to share such a unique journey with independent sponsors from been there and done that in the team. Like, but what are some of the best parts and maybe some of the learnings? Like, because
Wow.
every go ahead.
I would just say I'm very lucky to get to work every day with my brother. We have a ton of fun together. I'd say the worst part about it is we just try to outwork each other. But when I think about friends who've gone through partnership problems, it
Yeah.
usually comes down to a misalignment of two things: work ethic and values. And I think the great thing about being brothers is we were raised with the same values, we were raised with the same work ethic. And so we never have a problem because our moral compass is pointing in the wrong direction. We never have a problem that one person feels the other one's not working enough. And so it just makes our partnership so much smoother because we share those values and that work ethic. Um, it's also a lot of fun to be on a journey together with someone you spent your whole life with. And, when we started down this path, I don't know, close to 20 years ago, it wasn't as intentional as it may look in hindsight. And I definitely think our skill sets were really different in the early days, and they were very complementary. And so I couldn't have been as successful as I've had been without Michael. And I think Michael would say the same thing about me. And it's been really fun. Although we do have a lot of KC out there. I call it Kornman confusion, which you referenced a podcast about market research. That was actually Michael on that podcast, not me. But people, we joke about it. We go to conferences and someone will come up and talk to me, and I'll have no idea who they are. And they're like, and I'm like, hey, are you mean my brother Michael? And they're like, oh yeah, Michael. And people
But
do it
I've
to
been
him.
emailing with you 5 times. Do you know?
And what's hysterical is Michael's got a full head of hair, doesn't wear glasses. I'm follically challenged, and I do wear glasses, but yet people still confuse us. So there's a fair amount of KC out there, Kornman confusion.
That is awesome. Last question. When you look 5 years from now, what does success look like for Align Collaborate? Obviously, you want to do well for your investors and the team, but like what does that look like?
I mean, success is very easy for us. One, we want to produce industry leading returns for our investors, but we want to do it by being the best investor out there for sponsors who are raising capital for lower middle market buyouts, deal by deal. We want to continue to innovate and be the best equity solution that's built from really natively from the ground up for sponsors who are raising capital this way. And we think this deal by deal independent sponsor world just continues to grow and evolve and accelerate. And we want to make sure we're always pushing the leading edge to be the best investor, because we really want to be the first phone call for equity from the best sponsors. We wake up every day with that mission really near and dear to our heart. And if we do that, we'll be able to build a great portfolio of investments that accomplishes that first goal of generating industry leading returns for our investors.
Has it been what's it been like building out an institutional team? I mean, you have a sizable fund, what your $233 million fund, very different than being an independent sponsor. You're building a business that goes beyond the Kormans. It's an institution. Like, what's that journey been like versus just being an independent sponsor?
It's been fun. I mean, we've been building teams our whole careers, either at our companies that we were buying and building or at companies we ran. This is no different. We always want to recruit people who are smarter than us, who are better than us in every way. And we really are proud of the team we built here at Align Collaborate, from Kurt Cementag to Bob Grimitz to Scott Weiss to Kean Kelly, and then the whole Align Capital family. Is really just a special group of people. And everyone's really bought into our mission here to really be the best equity partner to independent sponsors out there. And it's great to develop talent and mentor talent. And I learn every day from the great group we've assembled, and feel very lucky to have folks kind of as excited as we are to go do what we're doing.
And if you did not call the firm Collaborate, what was the second choice?
I'd have to kill you if I told you, Jordan.
Just Align squared. There
we really start out with, we're part of Align Capital Partners, and that's they have a very successful PE fund, and so it's like, oh, that's gonna be Align PE. What should this be? And Align independent sponsor just didn't sound great.
You don't want to call it More Aligned?
More Aligned.
More Aligned Capital Partners.
And so we were just talking about the industry, and we are just talking about how, and part of when Rob, Chris, Michael, and myself were talking about what we wanted to build here and how we wanted to be different and unique, just the word collaborate came up a ton. And I think that's when Rob said, hey, let's call it Align Collaborate. And I may have chuckled inside initially due to the align, collaborate, combo, but it's really worked out well. It's been a
There we
great game.
go.
Really summarizes what we're doing.
Good stuff. Well, thanks so much for doing this. And also thank you for donating to support the Kyle Peace Foundation. And this episode is supporting the Kyle Peace Foundation, which helps disabled endurance athletes, disabled athletes. They do 5Ks, 10Ks, half marathons, marathons. So this episode specifically is supporting our Disney half marathon and full marathon in January. So thank you for doing this episode, and thanks again for supporting the cause. This is awesome.
Well, Jordan, thanks for having me on your podcast today, and it's really a fun conversation. You should quit your day job. You're pretty good at this.
I'm trying to build up the team with Jing. Thanks so much.
Thanks.